Hey, it's Phil Aitken here, and we're going to take a look at the February 2025 market update for Northeast Florida. So let's get my head out of the way here and we'll take a look. So here you have the market stats for February 2025, and it's got all property types in 6 different counties here in Northeast Florida. So the median sales price is $328,000. That's down 5%. So we are seeing the market shift down. There are pockets that are of areas closer to the ocean that are higher prices, and other areas are lower prices. But we had 1,800 closed sales. That's down 14% from the previous month. So if you look at back in March of 2024, we had 2,700, and in February we had 2,100. So we're down about 14% this February. If you come down here, 1,700 pending sales. These are the houses that went under contract in the last 30 days. That's down 30% from where it was a year ago. Last year it was 2525, and this particular month has been 1768. So if you take a look at overall inventory, it's up 68%. So a year ago it was around 6,500. It's almost doubled, up for 11,000. So if you take a look at these stats, 1,700. If you go back to 2021, the number of pending sales that we had there was 3,600. So we're running about, all the stats are running about half of what they were back in the spring of 2021. So 1,700 in February of 25. If we go back to March of 2021, it was around 3,300 pending sales. So why is that? Well, if you take a look at mortgage rates back in the spring of, if you go back 3 years here, go back in the spring of 21. Your rates in the spring of 21 were around 3%. We're up around 6.6% on our mortgage rates right now for a 30-year fixed. So that's pushing buyers down into a different purchase category. I did a recent study of St. Johns County home versus new construction, and the new construction deals are really good because the builders are giving 2% off on the interest rate for the life of the loan. So 4.9 versus a 7% interest rate, or a high 6% interest rate, it allows the buyer $100,000 more purchasing power. So a $450,000 price, you can, for the same monthly payment, you can get $550,000. So mortgage rates are having a massive impact. New construction is lowering those prices so that buyers can purchase more house. So if you take a look at the current interest rates, they're hovering in the high sixes, 6.63 to be exact. And let's just take a look at the market summary. How many listings do we have on the market? This is just for Duval County only. So there's 5,100 on the market, and in Duval County, less than 900 are actually selling. So that means that 1 out of every 5 houses that's on the market is selling right now. And so it's putting pressure on pricing. The blue line is the listing price. The yellow line is the sold price. So back in March of 24, the average price was $325, and that price is $305. So you can see there's downward pressure, because interest rates are high, affordability is difficult, and it's putting pressure on home buyers. That the prices on home sellers, it's gone from 319, almost 320, down to about 305. The month's supply of inventory is one of the highest it's been since 2009, and then the sold to list price ratio is 94%. In other words, if someone bought a house that was listed for 100, it would sell for $94,000. It's about a 6% discount right now. And days on market continues to be higher than normal, 72 days on market. So why is this? Well, it really has to do with inflation. If you look at the 5-year inflation, we got as high as 9%. And with the Fed trying to get mortgage rate, or trying to get inflation down, if you look at the last year, it got down as low as 2.4% in September, and it's ticked back up to around 3%. When the Fed started lowering rates on short-term rates, like for car loans and for business loans, they lowered it 1 point, and the mortgage rates went the opposite direction. They went up 1 point because inflation continued to rise. So if you take a look at the best month we had last year was 2.4. Let's look at mortgage rates for last September. Last September, they were right at 6% interest rates. So if you look at if you go back to the inflation data, if our forecast looks like that we're going to, our forecast looks like by the end of December, they're forecasting this, the interest rates, mortgage rates to be about 2.4. So if the past 2.4% inflation is a predictor of the future, then you're likely we got around 6% interest rates for mortgage rates 30-year fixed back when inflation was at 2.4. We're likely to get there again to the low sixes, high fives by the end of the year. So I hope you find this month in real estate helpful for you. But there are still 1,800 houses a month that are selling. It's just less than what it was. It's an affordability issue. So if you know someone that's thinking about buying, selling, or investing in real estate, we'd love to be able to talk with them. And there are always those cases where people do have to sell. And if you know of anyone thinking about making a move, send them our way if you would. People that sometimes folks are splitting up, getting divorced, or there's folks that have gone into nursing homes or death. There's a lot of different reasons why people are selling properties and buying properties right now. So think of us, 904-440-1758. Talk to you soon.